day. Ira Epstein with your agriculture wrap-up, and this is for Wednesday, and we're now at the 12th of February, 2020, and we're right after the 1:30 time frame. So where are we in all these markets? Well, as you can see in the grain markets, we had a rally day today. That in part is because you've got a risk-on environment hitting you in the stock market. The dollar's still taking off. In fact, I think the dollar's up like 6 out of the past 7 days. Energy markets across the board, all a big rally today. Cotton market up, coffee market up a little bit. So what we're getting is this idea in the marketplace that possibly the worst of this coronavirus in China is over. Yes, we're going to see spread of cases. London got a case today, but we're not dealing in the numbers that we have dealt with in China. Plus, China's going to change its method of telling us how many cases they have. They yesterday released an article that said that if you test positive but you don't show symptoms, you're not counted. That's going to change the baseline, so I don't know what that does. But I don't care. What I care about is what the markets are doing, and they're getting a nice bounce in every one of the grains. Now, when we look at the weekly chart of soybeans, the resistance point, as I see it, is this 910.5 area. Why? It's what I call the line in the sand. It's sort of like the DMZ zone between North and South Korea. The line itself is neutral. When you're down under it, it's not uncommon to rally back to it. When you're way over it, it's not uncommon to fall down to it. You'll look at these going on, and this is a close-only chart. You see it differently on bar charts, and we'll get to that. But you've had this monster break that took place, as we know, late January, carrying right through this coronavirus situation, and suddenly the market has been putting on a bit of a bounce. And we did develop a pattern, even without today, of higher lows and higher highs. That's what we've had in place even without today. Now, where does that carry the market? If I put on moving averages, the first moving average, the 18-day, is right here where the market basically stopped. It got to 893, and it paused right against that number of 892.5. There's a reason why, and I'll show it to you in a moment. Look at the Bollinger Bands. They're crashing into the market. So the top one is just coming way down, and this bottom one is going to gradually move in. What they're doing is they're wrapping their arms around it. And the reason for that is the straight down vertical move has now been met with sideways action. And the function of the band is to wrap itself closer to the market, and at the same time, what is the algorithm? Designed to keep the market trading within the bands 95% of the time. They're too far away based on the formula, so the formula self-corrects it. It's bringing that down. You asked me why I think the market went to the 18-day average. Let's go back right here to last Friday. This is called an embedded reading. When you have an embedded reading, it means that the pros are still selling the market looking for lower prices, selling the rallies. When you lose that reading, as you did here on Monday, the only time you can get that reading back immediately is the next trading day. And if it doesn't do it, it often leads to price and the 18-day average trying to come at each other. Now, what do I think pros do? This would have been one that I think they'd have covered on. If the number were just 20.3, not 23.9, it's a rough call. This one, I think that they were coming out of shorts. They had an opportunity the next day, and you kept the reading what? Unembedded. So now you're coming into the market today. My objective is wherever that 18-day average is, that's where I think the market could hit the wall. Went right to it, stopped against it. Let's go and look at meal. You lost the embedded reading. You had it here Friday. You lose it Monday. You keep it lost. I think the pros are nibbling on the long side. Stops under the most recent low, hoping to get back to that 18-day average. Hasn't done it yet, but that's what I think they're looking at. And I think the same event has been happening in soy oil, although the soy oil really lost this reading quite a ways off. It did it on February 5th, a week ago, and it's gotten to the 100-day average. What's the rule on that? It's the closest of the main moving averages. So I've got here to just show you the two main ones that I'm looking at. There's one more, but these are what I use here, and that's what it hit. And as far as I'm concerned, when it hit the 100, it made its objective. Now, If it rallies further because it's correcting further, then the 18 comes into play. There's another event that recently happened that scares me. Look at the 18-day average to the 100. You had a bearish crossover take place on Monday, this Monday, where the 18 got underneath the 100, still under it. Now you've got a resistance of 2 points and something else. You've had a bearish crossover that's not having an impact on the market. When I see that, all my horns go up on my head, and I probably have a lot of them. It's a warning sign that unless this market quickly gets under 30-40, this could be a trap for those moving average people. You'll see crossovers generally don't have a big lag to them. The market starts moving on the market. That's my experience. That doesn't mean it has to happen that way. In the corn market, I'm looking at the market fighting at the 18-day average of closes. And it's been doing that literally this whole month. You had one move over it and you weren't able to stay there and you're still fighting there. However, you have divergence. You've got the swing line now with higher lows, higher highs. The bias is down since you're under the 18-day average. If the market gets a pop through the 18, then the 100-day becomes the next resistance point. Is there anything here that can turn the market bearish? There is, if you were to get back under yesterday's low, but you're going to be right on top of the lower Bollinger Band, so I don't think that you're going to get aggressive professional selling even if that occurred. When I come to the wheat market has been running this lower Bollinger Band. It is oversold, not embedded, hit a downside target yesterday, first time you hit that band again, and it's basically getting a bounce off of it. That's what happened today, and you're up 5.5 cents. Is it a trend? I don't see one. I see a higher high, lower and low pattern, nothing that I'm in love with there. Sugar has 3 days in a row of settlements over the upper Bollinger Band. Now, where it came from was you got this narrow action, and then the market had the first day over. And if you go back and you look at our videos, we were talking, I said, are we going to get any follow-through? And then we did get it, and now you got your breakout because you've caught these people. You rarely go beyond 5 over that number. At the end of the month, there's a very strong seasonal that comes in this market, and it's often to the bear side. So we'll see if that works. There's no reason to be bearish here. There are reasons to say maybe the market's ahead of itself over that Bollinger Band. I give the odds tomorrow of the market staying over that band about 98% against it. Remember, I count each one of the consecutive days over the band, take away one of those 5 percentage spots. So I got a 2% chance of staying over it by the close tomorrow, which is a 98% chance against it. It's not bearish. It means I think it's ahead of itself on that band. Coffee. I've been looking for the market to get a rally here. I'm getting it, and I'm pretty impressed for the bears, not the bulls. You're not losing that embedded reading. You've come off of 97.40 up to 165, 300 points, and you still have the embedded reading. It'll be interesting to see if the low, we haven't had a low that's lower than a previous day in 4 days or so now. It'll be interesting to see what happens if you make a lower low. I had told you a while back, and check with my videos again, when I get a market that moves from like 140, 145 down to 95, here's what I do with my hands. I wash myself of it. And the reason is a normal reaction can kill me. It's already made such a big move. What am I looking for? Zero? I just walk away from that market. In the cocoa market, after having spent a couple of days up and over the band, yesterday we broke back under it, closed 29.18, a little lower today. Overbought market has hit the upper band area. I don't know. I'm not seeing anything that's good, bad, or ugly. The trend is up, but you're overbought and you've hit the upside target. Cotton. The action in cotton, forget today even. The action has been higher lows with a higher high yesterday, and then today you have this outside day up. So I again apply my theory. A market that has an outside day up should not see the low of that day taken out for the next 2 trading sessions. If it does, according to my rule of thumb, that's all that it is, if it does, I'm looking for the closest of a key moving average or the Bollinger Band to be a downside target. No real joke there. The market's high today was 68.79. First resistance, the 18-day average at 68.88. And what turns the market bullish? Let's not talk that if it just breaks down. What if it doesn't? A close over 68.88 becomes bullish. Now, it will also change where I'll put what I call my window envelopes. And for those of you that get my information, you know what I'm talking about. Window envelopes are a tool that I don't use in these videos, but I do in my morning subscriber video. And I do in my Spider ETF video at the end of the day. When we look at the live cattle market, still bearish. You have the embedded reading, and I realize you got a bounce in the market, but so what? Until you lose the embedded reading, I think the pros are sellers. Lose that, and I think you chase them out of the market. It's a pretty big down move. I don't know. Have we gotten to a value area is the big question. Here's something different. Remember we were talking in soybean oil on a crossover? Here's another crossover. Watch. And the market makes its lower and lower. It's not doing what soy oil did. That's the point I'm making. Soy oil's acting different. You always have to just remember that on charts. Keep a notepad with it. In the feeders, well, you're flirting right here of just hugging this 17 level, so you still have the embedded reading, and until it's lost, I don't see much. Lose it, then I'm going to look for the 18-day average to be hitting in the hog market. You're oversold. You've got the swing line with higher lows, higher highs, so you've got a trend up, bias down, momentum oversold. The chart's a mess. You know, one of the things that is neat is what we put together in our mobile market center. Now, let me explain what ours does versus others. Number one, you're going to be able to read it. This is one of the looks to it. We have other looks to it where the numbers are really big. You choose the look that you're going to want on it. You can trade off of it. That's number one. Number two, all our news comes in it. Charts come in it, and yes, you can put moving averages and actually read them on this. And by the way, you're looking at my phone. So all I did is we captured what my screen looks like. This is not that monster phone. What else does it do? You can listen to it. You can set it so that orally it plays the quotes to you. So you set up a file, you hit play, it's going to play for you. The news comes in it. I'm in there. So each one of the videos, other than my subscriber video, you'll be able to see free. If you're a subscriber, that'll play in here too. The system knows it looks at your user ID and passcode so that it lets you get in there. But it's all this looking at it, and I think that you'll find the voice command when you're driving a car. You don't have to look at anything. The weather we put in, this is not your local weather. These are maps for trading in grains, looking at the market around the world. It's really for the commodity markets, and that's what we think is so important to it. So you put all these features together, and you have something that I think is important for traders. And as I said, this is but one of the looks. We have another one where it's quite large that you can see, and that's because as I get with my gray hair older, I have to be able to read it. How do you get this? And it is free to you to give it a try. Give us a call. We'll give you your user ID and passcode. You can go to our website, sign up for the free offer. We'll put it in your hands. Remember, my videos play in it, and if you're a subscriber, I send out a notification. It'll pop. It's not a text message. It's a push notification. You just hit your phone, and all of a sudden my video will play. It's that simple. You can click up here if you'd like to get the trial too. It'll take you right to that page. I'm Ira Epstein. You have a good day.